35-year-old Ritesh, who works in an auto company, is thinking of buying his dream home just when the real estate companies have started to increase the property prices. Now, to control inflation, the Reserve Bank has made loans expensive. Ritesh is wondering whether to buy the house or postpone his decision. In this episode of Money 9's special show, Realty Check, we will talk about why loans are becoming expensive and what home buyers should do at this time. The real estate market, which had been in a mess for the last 6 years, had just started witnessing revival. One after the other, it has received two fresh aftershocks. The industry was already under pressure due to the Russia-Ukraine war, and the lockdown in China has disrupted the supply chain, increasing the raw material prices. Due to the increase in the prices of building materials, real estate companies have again started to increase property prices. Now, loans are becoming expensive due to the announcement of increase in repo rate by the Reserve Bank of India. It's a double whammy attack on new home buyers. Buying loans have also become expensive for home buyers who are troubled by rising property prices. This will have an impact on both the home buyers and the builders. Apart from this, existing and new loans will also become expensive for real estate companies. Obviously, they will compensate this by raising the property prices. Its effect may be seen in the form of a further jump in house prices in the coming times. The impact of rise in repo rate by RBI. After a long gap, the Reserve Bank of India surprised by announcing a sudden increase in the repo rate on May 4. Now, the repo rate has increased by 40 basis points to 4.4% in one stroke. Repo rate is the rate at which RBI lends to banks. The increase in the repo rate will drill a hole in the pocket of the common man, as it will lead to a rise in EMIs. If customers postpone purchase due to expensive loans, then it will impact growth of the real estate market, which had just started to boom. The impact of inflation on property prices. Due to the rise in prices of building materials, real estate companies have increased the prices of houses in the month of April. Real estate companies in the National Capital Region NCR have increased house prices by up to 10%. At the same time, if the inflation of raw materials is not curtailed, then the prices may increase further. More or less, the prices of houses have increased in all major cities of the country. In case of loans becoming expensive, companies will either increase the cost of houses or bear the burden themselves. If they bear the burden themselves, then their margins may be affected. In a year, the price of cement has increased by more than 100 rupees per bag. CREDAI's survey shows that steel has increased from 39,000 rupees to 90,000 rupees per metric ton. The increase in house sale. Data from property consultant firm Economicom shows that sales of houses in 7 major cities of the country jumped 71% during the year 2021 to about 2.36 lakh units. In comparison, 1.38 lakh houses were sold in the year 2020. The supply of new houses has increased by 85%. However, sales are slightly sluggish as compared to pre-COVID levels. In the year 2019, 2.61 lakh houses were sold. With the increase in demand for houses, builders hope market will be back on track. According to Anarok, the reason for the increase in sales was the lower interest rates on home loans and the desire of people to become home owners. But now that the era of cheap loans is coming to an end, it can also affect the demand in the market. What will be the effect of repo rate on real estate? Gulam Zia, Senior Executive Director of property consulting firm Knightfrack India, says that with the rapid changing geopolitical scenario, the supply chain and commodity prices have been under pressure. The interest rates raised domestically are in line with that too. This is not unexpected, as the RBI governor has already expressed concern about inflation. The increase in interest rates amid increased input cost is expected to impact the real estate sector. The real estate market has benefited a lot in the last 2 years due to low interest rates. An increase in the repo rate will translate into an increased EMI for the home loan. However, we believe that the stance of home buyers, their preference for home buying, and a good increase in salaries will continue to support the housing market. Monetary policy stance is still accommodative. With the pandemic subsiding and revival of the economy, we expect consumer demand to continue to pick up in the near future. Money 9 suggests home buyers and home builders have suffered a double blow as loans have become dearer. Building material prices are skyrocketing. There is no hope of prices falling at the moment. This may lead to further increase in property prices going forward. On top of this, it is being speculated that RBI may increase the repo rate 2 to 3 times more. In this situation, the home loan will be more expensive. So, instead of waiting to buy your dream house, buying now would prove to be a better step.